Varun Goel from KC Securities is joining us on this leg of the show. Varun, you're joining us on what's turning out to be a very weak afternoon of trade. Nifty is off 70 points from the day's high. You think it topped out at 54.50?
Rahul, if you look at the fundamentals of the market, we are trading close to 17 times FY11 earnings and almost 13 times FY12 earnings. I think purely on a fundamental basis, I don't see a lot of upside in the broader markets from these levels. I think earnings will really have to surprise on the positive for this rally to continue from these levels. Also, I don't think we have heard the last of the troubles in Europe. I think 23rd of July is when we get the results of that stress test of banks in Europe. So that is a key development that one should follow in the short term. So I think from a broader perspective, the upside seems to be capped at around these levels.
Varun, HDFC has delivered a 30% growth in interest income, a 23% growth in profits, both ahead of at least our expectations, but the market is very disappointed. What do you make of the stock? And while you might not have had a chance to look at the numbers right now, in general, is it something you would want to keep in your portfolio?
Well, I think I would need to see the results in a little more detail, but I think from whatever numbers that I have seen so far, they look quite impressive. I think 30% increase in net interest income is very impressive. I think overall for banking sector and for whole housing segment, this is good news, and we would expect the momentum to continue, and we would be quite positive in the space from a medium to long term.
How are you positioned on healthcare, Varun? Because we had the transaction that took place around Fortis and Khazana for Parkway. And now twice in 2 months, Piramal's have offloaded 2 businesses, first formulations, now diagnostics. Is this a good space to perhaps find investment opportunities, you think?
I think the whole pharmaceutical and healthcare space has been doing quite well for the last 6 months. I think even from an earning perspective, we would expect at least 20 to 25% growth in at least the Tier 1 and Tier 2 companies. I think the reason of renewed interest in M&A is the fact that all across the world, in the developed countries especially, the populations are aging and there are significant efforts going on to reduce healthcare expenses. That is why I think India is going to see a renewed thrust in terms of offshoring of manufacturing and research activities. So CRAMS, contract research and manufacturing, is clearly a space that we like, and I think that space should do quite well from a medium to long term perspective.
Okay, let's take a break on that note. Leave you with some thoughts from Ajay Piramal. We caught up with him earlier in the day right as this transaction took place. Some thoughts from him. Back with Varun Goel in just a couple of minutes. Stay tuned.
The rationale is that we felt that this business, if it had to grow, we had to substantially either do an acquisition because organically there was a limit to its growth, and we felt we looked at acquisitions for the last 1 year but couldn't find anything very interesting, and therefore when this option came of SRL, we decided to go for that one. What will we do with the funds? I mean, this funds along with the funds that will come from the Abbott deal, the first thing we'll do is to really invest in our existing businesses, which is in the CRAM space, which is in the critical care, and in the third is the OTC space. So in all these we will grow both organically as well as through acquisition. Secondly, we will also look at certain newer other areas, both in the pharmaceutical and healthcare sector, and maybe outside it as well. We will look at opportunities both within our existing space, as I said, so within CRAMS, within critical care and OTC, and we will look at areas beyond that as well. I don't want to put a time limit as to when we will invest these funds, because I think when the opportunity comes, we will do it. I'm not in a desperate hurry that I should do it in the next few months. We would have to wait for an opportunity. After all, we are going to create businesses which will last for a lifetime.
Quite a swift reversal in the last, half an hour of trade or so. We are back to 53.80 nearabouts on the Nifty. Varun Goel's been in conversation with us. Varun, what did you make of Infosys? Because the disappointment was so evident on the stock yesterday, it continued today, and we're looking forward to TCS tomorrow. Will you hold any of these stocks in your portfolio?
I think definitely Infosys results was quite disappointing. Although I think revenue growth sequentially was okay at 5% plus, but I think the biggest concern is that decline in offshore pricing. I think there's almost 6-7 quarters now we are seeing continuous decline in offshore pricing, and one really needs to know to be careful about that, and one has to see how the other companies in the space behave, because that is one very big concern on the stock. I think overall, from a full year perspective, there might still be some upside, but I don't think we are looking at a very significant one. There might be 5 to 10% upside still left in a year's time, but that's about it.
Okay, we've got about a minute to close. Let's see what's made it to the hit list and what's not. There'll be more losers than gainers today, I can assure you. But nonetheless, if you were to look at the top of it all, a 12,000 crore order did it for L&T today. Its stock still up by 2%. It's fallen off the day's high. 1896 is the day's high. 1876 is what the stock is doing right now. So it's off about 20 points from the day's high, but still up by 2% is the stock of L&T. Not doing too badly at 1877. Giving L&T company at the top is State Bank of India, which is up by about 1.5%. So good strong moves coming into that stock as well. You've got an Axis Bank that's approaching its numbers confidently, 1% up on the stock. So it's holding up in the face of a falling market. Let's focus on the losers. At the bottom of the pile is IDEAT, which is down about 3%. So in 2 days, it's lost close to about 9% of its market capitalization, about 6% yesterday, about 3% today. Ranbaxy down by 2%, M&M down by 2%, Infosys down by 2%. That's the biggest pressure point on the way down. Infosys down to about 2740. Remember, just a couple of days back, people were talking about 3,000 and beyond. You've got a Gale that's down by about 2%. You've got Cipla down by about 2%. And then you've got 1 to 2% cuts in stocks like Lever. 256 is a quote on that stock. ONGC 1261. Wipro is down to 398. That's a 1.5% cut. Maruti and Reliance Communications also down by about 8.5%. Sectorally, auto, healthcare, IT, oil and gas and metals are down anywhere between 0.5 to 1.5%. And you will not like.
And some of these counters work fairly well. You've got an odd CMC and an HMT. Both these counters managed to notch up gains of excess of 5% for themselves. So that was another interesting area of the market. LML continued its corrective run post clarification coming in that TVS is not interested in buying out the company whatsoever. So that was a cut of about 4 to 5% on LML today as well. And then kudos to PVP Ventures for managing a 20% circuit on a day like today when the market's mood started turning around. This is just a 16 rupees stock, but it was being bought and sold, and how about massive volumes and a 20% up move on this one. And GVK Power also stood out along with the RNRL. Both these stocks on the traders' radar today on the green side, up 3% each. So mixed kind of a bag for the mid-cap space as well.
Varun, how would you position yourself on capital goods as a sector right now, L&T and BHEL specifically?
And I think, Rahul, as far as the capital goods space is concerned, I think we'll remain quite bullish. We would expect at least 25% growth in earnings. I think both the Tier 1 companies should see at least 25 to 30% increase in order book this year. If you look at the IIP numbers of last several months, they've consistently been above 10%. We would expect IIP numbers to stay above 10% for the rest of the year also. So I would think net this year should be quite good for all the capital goods, engineering and construction space.
All right, Varun, we'll leave it at that for this afternoon. Good speaking with you as always. That's a word coming in from Varun Goel. So it's been a dodgy session of trade, but like we said, one that's seen Nifty close still within striking distance of 5,400 at 5,380. Sensex down about 80 points at 17,907. On behalf of our producers, directors and cameramen on the floor, so be myself, thanks so much for watching this Wednesday afternoon edition of The Countdown. Back with lots more in just a couple of minutes. Stay tuned.